According to Trackstar, a proprietary sentiment indicator, Financial Pro searches for 3M, a stock that we rated a perfect 10 out of 10, have exploded. Now, why the spotlight? 3M turned heads last week, reaching a whopping $10 billion settlement over PFAS chemicals. With over 4,000 lawsuits against them, this company has been sat in more than a hot seat. Still, they're not out of the woods yet. A defective earplug lawsuit could cost them a hefty $15 to $25 billion. Nonetheless, surprisingly, we've seen a 10% rally in shares recently. So what makes 3M unique? Well, it's not just a manufacturer, it's a tech company producing industrial, safety and consumer products. 3M has been reshaping itself too. In 2022, it split its food safety business and merged with Neogen, planning to spin off its healthcare business by 2023 and keeping a 19.9% stake in the company. Now, it's not all rosy. Inflation's hit gross margins, leading to 6,000 job cuts to save between $700 and $900 million. Despite these challenges, they generate $7.23 free cash flow per share, sufficient to cover their generous dividend. But what's concerning though is a potential $63 per share cost of ongoing lawsuits. Despite this, little revenue growth and inflationary pressures, 3M trades at a discount to peers. It has the best margins and returns in the sector and is known for its consistency. In a nutshell, 3M is a resilient, well-run business with stable cash flows. Yes, there are short-term headwinds, but we foresee a rebound as the macroeconomic environment improves. With stable interest rates, we see limited downside from here. 3M is a stock to keep on your radar.